Good Lord. So she's saying when XRP 3X's basically, yeah? Or was it?
She's set for life.
She's set for life. She has 1.3 million of her dollars in XRP. You know what the sad thing is?
The community knows. All right, we're live. Welcome back to Bitcoin.com's Token Narratives. I'm Graham Stone, joined by news and research gigabrain David Sensel and chief scientist Andrei Terentiev.
Hello.
All right, so let's get into our gut check. How are you guys feeling? Bitcoin's at $112,000. The bleeding seems to have stopped. September, historically one of the worst performing months for Bitcoin. 67% of the time Bitcoin is down, has historically been down in September. September's about to start, obviously. What does your gut tell you?
60% of the time, it's down every time. Basically, what you're saying. Yeah, I mean, I think it's fine. Bitcoin seems to be cooling off while alts are heating up. Ethereum was the benefactor of kind of that rotation of attention and capital, I guess, away from Bitcoin. But it seems now that we might be setting up for Solana to be taking over. My timeline has been filled with bullish Solana posting. The Sol ETH chart has been plastered everywhere for the past couple days. A lot of traders that I follow patting themselves on the back for doing such a great job rotating out of ETH into Solana. So I don't know, Graham. I guess you're going to be really happy. Your precious Solana, basically Sol ETH, right? You're basically trading Sol ETH is doing well, and it looks to be breaking out.
Yeah, this is on the back of some big Sol DAT being launched, or rumors of it being launched.
Yeah, this is the first time I felt like this is the alt season starting, which made me nervous because this is like I think like ETH alts versus BTC have been maybe going up a bit the past couple of months, but like you obviously had that huge ETH rip, like even in the past couple of weeks, and Solana has been like outperforming, and Pump has been like bouncing back and things like that, and then that started to make me nervous. We're like, oh no, this is the second part of this cycle. This is no longer the BTC pump. This is the alt season portion of the cycle. And once the alt season portion of the cycle starts, BTC doesn't usually go much higher than where it is right now. So I've started to feel a little bit nervous. The hopium is definitely that the October, November, December is like the best months, I think, for BTC usually. So I'm still like got that hopium. But if we see a weak end of the year, I'm not feeling really good right now, even though I've had bullish takes in the past couple months.
Yeah, there's a growing consensus, it seems. Like we talked to quite a few people at WebEx in Tokyo who said this, which basically there are more and more people, and you're seeing it on Twitter as well, more and more people are saying the 4-year cycle is over. So David Bailey, the Bitcoin Inc. CEO, he says, there's not going to be another Bitcoin bear market for several years. Every sovereign bank, insurer, corporate pension, and more will own Bitcoin. The process has already begun in earnest, yet we haven't even captured 0.01% of the total addressable market. We're going so much higher. Dream big. My question is this...
Good Lord, these words.
Is this...
I swear to God, man.
Yeah, is this growing consensus amongst the elites, the big bag holders? Is this really just a psyop by insiders to convince retail to be their exit liquidity?
I mean,
they
I
have
don't
some
think
point. They got a point.
I don't think. I mean, here's the thing about just in general these kinds of statements which you hear. I think the people who say them almost always believe them, right? I feel like that they're not. I mean, so maybe they're psyoping themselves, but so I don't think they're trying to create exit liquidity necessarily. As for the actual pronouncements and in the words, it just sends off my end of cycle. What's it called? It just makes that radar kind of go haywire because the language is just so over the top, and you just got to think like, okay, so he's saying this kind of stuff now. Where does he go from here? Like, what's the next pronouncement 6 months from now? Bitcoin. It's gonna, I don't know. It's gonna be your wife, and you're gonna have children with Bitcoin.
There will be no more fiat currencies. The age of fiat currencies is over.
We're gonna ride Bitcoin to Mars and live forever through Bitcoin. I don't know. It just it's so euphoric sounding already.
I mean, I
don't know.
I can buy the 4-year cycle being over to a certain degree. I guess if the 4-year cycle is over, though, what I see is like the growth rate of Bitcoin is going to like decrease over the long term. So I think like right now, like the CAGR is like what 40 or something, 40% of Bitcoin. Like what do we see if the 4-year cycle is over, and what does that become? Like I don't see it being like a steady 40% growth year over year. It's got to either like spike up and spike down, or that growth rate, reverts much closer to something like the S&P or like whatever, which is like 10%, right, year over year. So part of me thinks it's like this. It's almost like leading to your own demise of these like hyper bullish statements of like the age of Bitcoin has begun. It's like, well, if that's true, then you have already like super wide distribution, and then the growth rates are going to actually decrease. That's my take, at least. And then it becomes like kind of like a double-edged sword of like, oh, it's not as exciting anymore because now the growth rate is only, I don't know, 10% or like whatever the reversion to the mean growth rate of capital it can become.
This chart that I'm sharing on the screen right now shows it's perhaps evidence that the 4-year cycle is still in play. It shows long-term holders having already realized more profit this cycle than in all other cycles except the 2016-2017 one. So the people are saying, okay, this chart shows that we're entering the late phase of the cycle. Now, one of the comments here from Willy Woo, who's an on-chain analyst, he says there's a distortion to this metric in this cycle because all the BTC entering spot ETFs and treasury companies registers as long-term holds after 5 months, when inside the security it could be bought and sold many times by short investors. And many of the cycle indicators that people have relied on in the past, it seems are increasingly perhaps becoming less relevant now, thanks to the institutionalization of Bitcoin and the way like the on-chain metrics of that people have followed in the past don't make as much sense now, just because like Bitcoin is hidden behind TradFi rails.
Wait, so what he's saying is like the ETF might hold like 1,000 BTC, but within that, there might have been a ton of like trading of the ETF like within that time period, so that like the
Yeah.
Bitcoin's been held. Okay, gotcha.
Yeah, so yeah, from an on-chain perspective, it looks like the Bitcoin hasn't moved, it hasn't been traded, but the equity has been traded, and these metrics don't account for non-on-chain trading volume, and so it really would paint a different picture if they somehow accounted for the equity volume. So serious on a serious note, I kind of agree with Arthur Hayes that um, the 4-year cycle was probably overplayed from the beginning. Right, it was never exactly a 4-year cycle, and so this cycle, however long it is going to be not exactly 4 years, and you have to kind of just look at a bunch of different metrics to judge when and how you think the cycle is going to end. I think that David Bailey could be right if Arthur Hayes is right, which is the government starts to print a bajillion dollars again, right? And so it's basically, it's not that Bitcoin is growing in value per se. It's just that the fiat money is being debased rather quickly, and so Bitcoin kind of stays the same and just grows in value in fiat terms.
Yeah, so now I've got the good old M2 money supply chart, which we often talk about, and you can see that it's just steadily grinding up. It's not the year over year change, the year over year growth isn't at 2021 levels by any stretch of the imagination, but you're getting these waves of growth and waves of year growth ramping up, and just a steady climb in the overall global M2 money supply, which everyone knows correlates quite well with the price of Bitcoin.
Hayes seems to think that starting next year, leading up into the middle of 2026, the government, the current administration, is going to start 2021 style money printing in order to juice the economy for the midterm elections. And so, Graham, then you could see that kind of just insane, that insane increase in M2 money supply, which would seemingly supercharge Bitcoin and crypto.
Yeah. Just going back to something, Andre, you said a few minutes ago, where, okay, so you're starting to see certain altcoins pump, and that is an indicator of a sort of late stage cycle. One of the ones that pumped bigly over the last week is Crypto.com's token CRO. It 2x. I got a DM from a retail buddy who's into CRO, and he sent me the press release where this is the reason for the pump, right? There's like a new
press release,
a new CRO DAT, where the headline of the DAT is like, it implies that they're going to be buying $6.1 billion of CRO. But if you actually read the DAT, and this is like, as we've talked about many times, the details matter with these things. Most of it is just taking CRO assets that are already held by Crypto.com and putting them into this vehicle, right? And there's like the amount of cash that's going to be actually used to purchase CRO is by very far from $6.1 billion. Yet the headline, right, is what matters. And CRO, like many other tokens, are retail driven.
You know that you're dealing with a retail coin when a press release is the thing that drives the price. I mean, come on, dude. That's pretty funny.
So basically, they're just putting their treasury bags into this company and then just
That's what it
which they
seems
probably
like.
can't sell because it's like 6.1 billion or whatever would dump the price. They sold it. So they gotta pump the price 2x so they can offload other bags.
Yeah.
Yeah, they're transferring the bags that they already hold to an equity instrument and making a headline off of it. Hey, look, we're transferring our bags.
Yeah.
Please buy them.
I thought I heard something Trump or Trump's sons are somehow involved in this thing. Is that
That's right. Trump Media. It's a merger of some sort between Trump Media and crypto.com's something.
not harm?
Yeah.
That's wild. So Trump Media was also, or wasn't, World Liberty Financial is also like heavily connected with the Tron DAT as well, right? I believe it's similar structure too. I think the Tron DAO or whatever put in a bajillion Tron to like seed the DAT. So
I
seems like
mean,
a
this
similar
is
structure.
exactly what you guys talked about at WebEx with Steve, right? It's the magic wrapping paper where if you take this thing and say we're doing a treasury company and it pumps 2x, it's like people are going to keep doing it. Like, you'd be stupid not to do it, right? If that's what's going to happen. So how long? The gift wrapping paper might be laced with arsenic or something. You might see some negative effects in a couple of months, but for the time being, it's just going to keep happening, right? So, how far down the chain of coins does this go down? As long as it keeps pumping, we'll just keep going down to the top 100, top 200, top 300.
Yep.
Yeah, it's Hasib's worldview is very much again, it's just not casting aspersions or anything, but it's very much like how would you say, like, oh, you're entering into this with full knowledge, or you should be, and so if you make mistakes or get your money taken, then that's your fault. I mean, and I largely agree with that, but still, I think it is sad that dumb money, like myself, is going to be taken and given to the smart money.
All right. David, you're at Bitcoin Asia in Hong Kong. How's that going? And maybe could you contrast for us the vibe there versus WebEx, which we were all just at a few days ago in Tokyo?
Yeah, I mean, so the obvious difference is the fact that this is all Bitcoin focused, and thus, whereas WebEx had kind of everything. But I think the things that I was surprised at for Bitcoin Asia was it has this. It's using this big convention hall space, and it was a lot more spacious than Consensus Hong Kong, which is in the same space. So there were a lot more booths at Consensus earlier this year, and this had far fewer. So you have like much bigger kind of walking lanes and all this kind of stuff. And yet, this was really crowded still. So even though there were fewer booths and more, there was more room for people to walk around at, it was quite crowded. I talked to some of the conference organizers, and they said that last year they had 6,000 people show up, so pretty small. And whereas this year they sold like 22,000 tickets. And when he told me this, it was like, I don't know, 11:30 a.m. and there weren't that many people. But by like 2:30, 3 p.m., it was a bit difficult to walk around in many areas of the conference. So it really got busy, and a lot of it was retail. I would say most of it was retail. So a lot of
well, it would have to be at that scale.
no, I mean like Token 2049. They had like 30,000 people, and there was like no retail. It was all everybody there was just like crypto native-ish. Everyone was with a project or this kind of thing. So I mean, it actually we talked. I talked about this with a couple people. Like I'm really excited to see how like Singapore is this year, to see if this trend of retail continues, and if it does, then you'd expect like 35,000 in Singapore, with like 15,000 extra being retail, because every single person I talked to at Token 2049, they were in some kind of
in the industry.
project.
Yeah. And this is what we noticed at WebEx as well, that there were many people in attendance there who weren't working in the industry, like just enthusiasts.
Yeah.
So does this portend? Does this tell us something about where we are in the cycle, or
I mean,
a phase shift in just retail enthusiasm in crypto's back? Crypto's not so much a dirty word as it was 2 years ago in the wake of the FTX collapse.
I mean, yeah, I think this is a sign. I think this is a sign that maybe retail is starting to pay attention with all these stats coming online. I guess it's taken time for retail to really understand that crypto is a thing that to start speculating on again, and maybe the risk appetite is getting peaked now. Just to contrast it, earlier this year there was a ETH Tokyo event, or late last year, and that was really trying to bring in retail. They had all these slides and ball pits and all kinds of stuff that is very, very focused on retail. It was empty. And this is in Tokyo, downtown Tokyo. There was nobody there. And I talked to some of the kind of conference organizers and people who threw events in other places, and they were like, yeah, this is terrible. This is a retail focused event. And there was just nobody there. WebEx, there was, I would say, mostly retail, it felt like. It was not very much in terms of like insiders. And you could feel that by the fact that usually when it's a kind of crypto native people or people who work in the industry, by like 3 or 4 p.m., the floor is empty, right? Because everybody's going off to the side events for the evening. But
they've done their schmoozing for the day at the event.
Exactly. But at WebEx and at Bitcoin Asia, it was like 3, 4 p.m. and it was only getting more and more crowded. So which is a different thing. You're like, whoa, this is crazy. It's getting more crowded instead of less. So I mean, yeah, I would say this is a reasonable indicator that maybe retail's coming in. I wouldn't bet everything on it though.
Question on the I guess booth or presenters or things like that. I feel like on the Bitcoin side, in the past couple years, there was like a push for like the L2s, ordinals, runes, things that were like not core Bitcoin related. And we didn't see any of that in like the American conferences, where that was much more heavily focused on like mining. But in Asian conferences, they would have some focus on like L2s and things like that. Is that still present, or no presence anymore on kind of the DeFi on Bitcoin, L2s on Bitcoin, runes on Bitcoin, etc. type of stuff?
Yeah, I mean, that's what I thought too. And I didn't go to Bitcoin Asia last year, but Jason did, Bitcoin.com COO. And he told me that last year it was all, like you said, it was all like Bitcoin L2 ecosystem stuff. He said it felt a little scammier in terms of just kind of some of the quality of Bitcoin projects around, things he had never heard of, meme coins on Bitcoin and L2s that kind of just seemed like fly-by-night operations. So I was expecting a lot more of that compared to Vegas, the Bitcoin conference in Vegas. But honestly, I didn't really see much of it at the conference floor yesterday. Now I'm going to look again, try to pay a little more attention today just to make sure that I'm not like delusional. But much to my surprise, it was the biggest I guess, sector on the conference floor, booth wise, was like Bitcoin mining hardware, right? Like not exactly operations, which you saw had a huge presence in Vegas, but it was, Bitmain and all the various kind of Chinese ASIC producers, cooling solutions, all this kind of like infrastructure, hardware manufacturing. So it seemed like more serious. There were a couple little projects here and there, but nothing like I was expecting, to be honest.
So is the Bitcoin L2 narrative fully behind us? Is it over, or is it?
I mean, honestly, what do you think? I'm not sure. It wasn't present. So does that mean it's over? Does that mean that we're all taking a break with that?
I would say probably. It sounds like yes to me, in the sense of I was always a little bit bearish on that narrative, in the sense of like, okay, people are going to we're going to like unlock this liquidity on Bitcoin by moving it into these L2s and bridging it, and people are going to use DeFi and stuff like that. My experience with like the OG Bitcoiners, like they don't want to do that. They're the David Baileys of the world that are saying, just want to scream about Bitcoin is going to the moon and everybody's going to be buying. I don't want to do anything with it, right?
Yeah, well, not only that, but for people who do want to do that, yeah, and I mean, for those who do want to do something with their Bitcoin, they already have options to do it, and it's tokenized Bitcoin on L1s like Ethereum. You're seeing
or Hyperliquid.
Or Hyperliquid expanding to Solana. It just seems like, what's the need? And those are established chains. Yeah, there's bridge issues, I guess. But like, if you're a Bitcoiner who clutches their Bitcoin, are you really? I feel like you would trust wrapping them and putting them on a trusted chain like Ethereum or Solana or whatever, more so than some like untested Bitcoin L2, like by comparison.
The Bitcoin clutchers win again. They win again. Progress has stopped.
Yeah. Oh God. Yeah, dude. They're also kind of hypocrites a little bit, because so I would say mining was probably the single biggest sector. Number two were the DATs. You just saw tons of DATs. You saw U.S. DATs, you saw Hong Kong DATs. It was just there was a British one as well. So I mean, like this treasury meta was everywhere, and MetaPlanet had this huge, crazy looking booth as well. So that seems to have kind of, I think, taken up much of the attention.
My question is, the DAT narrative actually hypocritical for Bitcoiners? Because I feel like it's the ultimate Bitcoin narrative of just like, we're going to convince these other things to buy Bitcoin, and
but it's
they're going to
custodial.
get rich.
It's custodial. It's a centralized custodial thing. So people are buying fully custodied Bitcoin, right? Isn't that go against the whole Bitcoin ethos of not your keys, not your coins?
I've always kind of wondered, to a certain degree, on that, of like the people that are like the Bitcoin maxis. It's like, how many of them are like fully cold storage, or like how many of them are keeping it on exchange and things like that? Because I feel like,
just the reality of it is, the new marginal buyer of Bitcoin doesn't really care so much about self-custody. That what they care about is like a hedge, or just like an investment, a speculation. So it doesn't matter where they get it. That's how I feel. Yeah.
Yeah. I mean, I agree with that, but those aren't Bitcoin maximalists, right? Those aren't Bitcoin OGs. Yeah, these aren't the people who have been murdering progress in Bitcoin for the past 10 years. So
that's the whole point. It's like there's just this whole new wave of people who see Bitcoin as a good investment, and that's what's driving. That's like the future of Bitcoin, is that.
Yeah, but
not
Graham,
necessarily self custody. Yeah, it can be self custodied.
why do the OGs accept this new class of institutional centralized
because it pumps
buyers
their
of Bitcoin?
bags, obviously.
Yeah, and they rejected people in L2s and everything that are trying to, I don't know, make Bitcoin useful.
Yeah.
I think like
Yeah.
the what I've seen over the past couple of years is I think like the maximalist narrative was there's like a more balance between like the inflation hedge plus the non-custodial nature. I feel like over the years, like the non-custodial part has become less and less and less of like a talking point compared to the inflation hedge, right? Like any maximalist would be like, okay, no, the government like is not going to be able to seize your Bitcoin. People don't talk about that like very much anymore at all, even from like from a maxi perspective. At least that's like my feeling. It's all about this is now like an inflation hedge, and that's why you buy it. And like you can custody if you want it, but that's not really some sort of major talking point anymore. I don't know if you guys get that sense as well.
Well, so I listened to Balaji had a little talk, fireside chat, I guess is what you call it, with Mark Moss yesterday, and they talked specifically about this and how Balaji, at least, is, I guess, kind of this principled OG and thinks that Bitcoin is kind of a check on government tyranny and all this kind of stuff. And so they specifically talked about how Bitcoin makes it more difficult for governments to seize your assets, right? They talked about the cost of violence, basically, right? Like if you have fiat that's in a bank, it's much easier to censor that money and then take it because it's just on a centralized ledger. You can still do that with Bitcoin, but you have to kind of do it individually. You have to go door by door, physically go there and kind of force it out of individuals, which is completely feasible. It just takes a lot more time and effort. So, I mean, this is what I'm talking about. Is I feel like there's like this cognitive dissonance. So, Balaji's sitting there talking about how awesome Bitcoin is to fight against tyranny, and the what's it called, the self custody nature of it is so important. At the same time, he's not bemoaning the fact that the new marginal buyer is, DATS and BlackRock. You know what I'm talking about? So it just seems like there's like this. If you're gonna extol the virtues of Bitcoin, being self custodial, then you should also be really, really worried about the fact that everyone's buying Bitcoin going through DATS and BlackRock, and that's going to be trivially easy to seize.
Yeah, you're basically just reducing the number of doors you have to kick down, or whatever you want to call it.
You won't even have to kick down a door. You're just going to call BlackRock. You're going to call Larry Fink, like, "Hey, man, we're really pissed off. Give us the Bitcoin." He's going to be like, "Yes, sir," and that's it.
Well, I've heard this theory that it's actually the fact that it can be withdrawn to self-custody fairly quickly, even maybe not necessarily from DATs, but definitely from ETFs. That alone is enough to so when smart money sees the writing on the wall, they will withdraw from these instruments, and that'll be enough to prevent the government from trying to shut them down.
It's the bank run on Bitcoin is the DAT bank run, I guess.
I'm not so sure about that. I mean, the writing on the wall. I'm not. Yeah. I mean, I guess if the government telegraphs that they're going to seize Bitcoin, maybe. But all these like high net worth individuals, they have more to lose because they're like singular targets. They have more to lose by not complying than like you and I, right? Because why would Larry Fink stand up to or warn others about the impending seizure of Bitcoin? I just feel like then he would absolutely get punished by the government. So I don't know.
All right. So I think the lesson then is,
not your
if you're
keys,
concerned
not your
about that, exactly. If you're concerned about that, right? You hold your as a for our listeners out there, make sure to self-custody your Bitcoin, but keep cheering on the rise of these DATs and ETFs, because that's going to increase the value of your Bitcoin, right?
Or, I mean, the other option, the way less popular option is maybe support the idea of growing the Bitcoin ecosystem so that it can be useful on its own. There's always that option, because that would act as a way. I mean, like even you interviewed the Bitcoin Solana bridge, basically. Was it Zeus?
ZBTC, Zeus.
Yeah. Zeus, okay, Zeus. And then Hyperliquid now has spot Bitcoin on it. Ethereum has wrapped Bitcoin. Those are decent half measures, I think.
Yeah, I wonder why. To me, like, I kind of wonder why there isn't as much cheering on of those. Because, like, when you have this, like, Bitcoin or whatever, it kind of feels like a DAT, right? It's basically a custodial measure that's, like, distributed through this. And you actually get way more economic activity using one of these, like, centralized wrapper coins compared to the money getting into, like, a DAT or whatever. And it allows Bitcoin to keep spreading as kind of a reserve currency throughout all these chains. But it's been like, Bitcoiners have been very against those ideas, but pro DATs, that's weird.
But
the devil's in the details.
Number doesn't go up. Number doesn't go up, though.
Yeah, well, because with the DATs, the financial engineering enables basically a leverage purchase of Bitcoin. But yeah, in terms of utility, I'm bullish on these L2s, like Bitcoin, tokenized Bitcoin on other chains. But the devil really is in the details with like how the bridge works, right? So I think a lot of people have been jaded with the way WBTC works. It's like there's like a single custodian or something. Like, what is it? I forget the name, but whereas some other chains, like the Zeus guy is like, I'm not going to pretend I understand the details, but if you believe him, it's, it actually is like decentralized, the bridge, right? And, it's time like some kind of
TBTC is another decentralized one.
Exactly.
Yeah. Alpin Labs, they also have one, right? Like, so
yeah,
fully
so
like just
as
smart
long as
contracts.
Decentralized, and you can actually permissionlessly, within a reasonable amount of time, withdraw your Bitcoin back to main chain. That's critical, and so
yeah, that's the one thing that I think is really. This is actually why I prefer CBBTC compared to WBTC, because they're both like completely centralized, right? But with WBTC, you can't actually withdraw to the main chain unless you're like, you got like some net worth, and I don't even know really. That's the other thing. Like, who is actually running that consortium? It's like not super clear. With like Coinbase BTC, it's like I know this is fully, centralized, but I also know who I can go to exchange back into BTC back onto the main chain relatively quickly. So I kind of hope that there will be more wrappers that, even if they're centralized, or allowing that, because I think with WBTC in particular, like that was not ever really good for like retail.
Yeah. So with CBTC, are there minimums that you're allowed to wrap and unwrap with that? Because I know with Threshold, the minimum is very small.
Yeah, no, I think with CBBTC, it's also very small. I think you can do it like, you can get it on base, and you have to get it on base, but then it's also, like bridgeable to all the other chains and blah, blah, blah. But I think it's like $5, right? It's not like anything.
Works for now while we trust Coinbase, but there's still that risk in the scenario where, like the clampdown comes.
Mm-hmm.
All right. We got about 20 minutes left here. I think we should talk about some of the themes because we've had quite a few interesting discussions at WebEx, and David, you've been doing some interviews there in Hong Kong.
Yeah. I mean, for me, the WebEx, the two things or maybe three things I want to talk about. Maybe we don't talk about Arthur Hayes because we talked about him so much at WebEx, but certainly Justin Waldron. Would love to kind of just rehash what he was talking about and see if we can
So just to
understand how that
set
works.
this up, right? Just to set this up, last year at WebEx, which I didn't attend, you guys were there. It was all about crypto gaming. A year ago, that was going to be the big thing. Games on crypto were going to be like, by now for sure, worth billions of dollars. But this year at WebEx, there was nary a crypto gaming protocol or business booth there in sight. But we did interview Justin Waldron of Open Game Protocol, and this idea, I was pretty convinced that this idea has legs. So, David, not to put you on the spot here, but explain it like I'm 5.
Okay, well,
because it's complicated.
This is the trouble. So yeah, I'll try to, and you'll have to kind of help me figure it out because it is difficult to wrap your head around. Which is, I think, maybe one of the reasons. Honestly, usually when something's complicated, it means it's not going to work. But in this case, I think it's why it's going to work because it required a kind of an insider to see that there was this thing lacking. Anyway, so
this guy is an insider, Justin Waldron. Just for his background, he worked at Facebook. He's been involved in.
He was Zigna, the biggest Facebook game. They were like 2 or 3 billion. They made up, like he
Farmville.
said at the Farmville, exactly, Farmville. They made up like 80% of in-game purchases or whatever for Facebook at one point, right? Which is insane. Anyway, so he got to see behind the scenes this idea of like advertising, and advertisers come in on one side, and then you meet that with people who are trying to get attention on the other. And then also the third thing is, of course, the users. And so how do you kind of make all these different parties happy and give them what they want? So it's not just like a two-way marketplace. You have more than two parties that are meeting to be satisfied. So we look at this with crypto, and he noticed that, for example, the gaming industry, traditional gaming industry, nothing to do with crypto, they spend something like, what was it, 200 billion, Graham? Was that it? 200 something like that.
I believe that was the number on advertising.
200 billion a year on advertising, right? So getting attention for games is incredibly important, very, very expensive, and traditional gaming studios spend a lot on it. So that you have that. Then you have in crypto, you have meme coin projects, right? Like, so you have Doge or Fartcoin or, I don't know, Yeezy Coin. And they have a different issue, which is not getting attention, because it is all attention. That's the whole thing. The whole thing is just attention. They have a different problem, which is retaining what's it called? Engagement, right? So they'll get a lot of attention, but then there's nothing there to do. And it just kind of, you buy the coin, maybe you trade some gifts, make some memes on the timeline, but then quickly you move on because there's no there. It's
and then so
attention
that
only.
That attention fades very quickly, as we've seen with these meme coins, right?
There's nothing to do. Then you have another group, which are just gamers, right? People who want to play games, who want to play fun games. And specifically, you have people who want to play games and maybe get rewards for playing the game, right? And this is true in crypto and outside of crypto, right? Like, this kind of reward mechanism is just all over the place, from Hamster Combat to Farmville or whatever. You have this dynamic, and so you can kind of make this service.
Just to interrupt there for 1 second, I'm not sure that it's that the game players necessarily want the rewards. They just want to play the fun games, but perhaps rewards help them to stay retained within the game, like to get through, to learn the game. Like something like that.
Yeah. I mean, it's you could look at something like Hamster Combat, and anyway, I mean, so yeah, fine. How integral the rewards are to the experience will vary depending on the game, as a mechanism. But anyway, so yeah, you basically have these three parties, and there was one more party I can't recall off the top of my
there's
head.
the
Anyway,
app stores.
Yeah, I mean they just want to cut, but in terms of like why you have this marketplace, and so basically the open game protocol is a traders. That's who it was. That was the last one. So then you have crypto traders. All they want is an asset that has a lot of liquidity, volume, right? They don't care if it's going up or down, really. Although if it goes up, it's good. They want something that has attention and liquidity, right? And so that's all that they care about.
Volatility goes up and down.
Yeah, exactly. Anyway, so you put all these things together, and you get this thing where game creators can use some of their advertising budget to invest in derivatives of meme coin projects, right? And the meme coin projects, they will glom onto this to games that support their meme coin. For example, let's say it's fart coin, because this gives people within the fart coin community something to do, and maybe attracts new people to that same thing. They get rewarded in fart coin for participating in these games. So it extends. So then the meme coin communities will be incentivized to give attention to games that are associated with their community. The gamers, they get to play fun games ostensibly for free. So new games are being created, right? And they get to play them for free, and they get rewards. They get rewards in these like derivative tokens, and also the original token themselves. And so you get this, and then traders, they get to trade not only on the meme coins, but also the derivative tokens, which are he calls game coins, right? And so you get all these things coming together, and everybody gets what they want.
So let's just see if we can give an example of this. Okay, so let's say you've got a simple but fun game, and Justin Waldron said there are a lot of these. There are hundreds of thousands of these on the app stores that they're actually good games, but they just can't get attention because there is so much competition and it costs money to advertise. Okay, now if they can find a little bit cheaper of a way to advertise and reach an audience more efficiently, that makes sense for them. Okay, so he's saying that some of these games might just like tweak their game or reskin it in a way such that it integrates like a fart coin reward in the game, and then that.
That gives you a big audience potentially,
yes, right? Exactly. So they can, they'll buy fart coin, right? But it'll in the end it'll just be less of an advertising cost than paying to like have their banners put on Google ads or all
up to 10 times less. Up to 10 times less. Right. So you measure it by like what is it? It's the same metric we use. Like how much do you pay for a user? Right. He said that
cost per acquisition.
And they say like traditionally for gaming, it's like between $5 and $10, right? And they're for them it's much lower. Like I think it's like less than $1, right? Because you're tapping into these giant meme coin communities. He gave these numbers too, which to us sound trivial in crypto. He's like, Hamster Combat had 300 million users at its height, and he's like in gaming, that's insane. That's crazy, ridiculous, insane numbers. You're talking about a mega blockbuster. He was like, but in crypto, he said the whole crypto industry just yawned. Oh, next. He said that's crazy. You guys don't know what the hell you're talking about, or you don't recognize like what a treasure trove that is. And so, if you can tap into that level of virality, it's worth its weight in gold.
So I kind of get this. Going back to, like, let's say the gaming business model, um, where previously you might have had to buy some in-app items or like skins or like whatever. Do we expect the guy that came in from Farcoin to be a purchaser of that, or kind of what's kind of
So
like the bridge there?
Well, the game still needs to find a way to monetize their users as they always have, right? And that's perhaps separate from the crypto thing. So the games, all these like sort of fun games, they're not tier one games. You don't pay for them. These are free to play games, right? They have ways, whether it's advertising, in-game advertising, interstitials.
Exactly.
You can purchase in-game items. The games have their ways that they monetize
already.
Just the only
they already have that
already, right?
So
and the only difference is. Yeah, that'll all just stay. The crypto component is really just a way like to get the users into the game.
Okay. Well, yeah, I feel like that's a bit of a different take than previous gaming, because I thought the previous crypto vision of gaming was like you would buy the gems or whatever, and those would be ERC like 20 tokens.
Exactly. This is not that.
People don't really want that. It seems that people don't really want that. People like the consensus seems to be that like okay, there are games where earning matters, like poker or whatever, like that's sort of the core of the game. But actually, most games, people don't want to worry about like trying to make money in the game, and like that's what a job is for.
That's called a job, yeah.
Exactly. or like a high stakes game that's specifically what the game is, like poker. Okay. But most people just want to like have fun, right? So they're not like farming the game to make money, right? They just want to play. And so don't try to shoehorn that into it, because it's just not going to work. I think that's sort of the lesson that's been learned here over the last couple of years with crypto gaming. So this is a completely different approach. It's throwing that all out and just using crypto as the marketing onboarding to the game.
Yeah.
And I guess the interesting take about this is like not the game, also that the game's not going to launch their own coin, because like that's not what they're doing either. It's more of like,
exactly.
Okay, yeah.
That's not their expertise.
Exactly. He said up to this point, the game developers had to step outside of their area of expertise, which is making fun, engaging games. And they had to like hire a smart contract maker. They had to look at tokenomics and all this other stuff that is really not their remit, right? And this kind of this marketplace. He said a decent analogy, which is not a great analogy, but it kind of holds true, is like an ad network, right? Where you basically have this kind of hub, and it basically meets the not the demands, but it satisfies many separate users that are coming in from different angles, right? Like you have advertisers, you have different platforms, you have users, and it matches all these up in this one place. And so it's very different than what I thought it was, right? Also, they're integrating. What were they? So I forgot the thing that they're launching in a couple of weeks, but they had a V1 and it worked really well. But the problem was the tokens. What was it, Graham? The tokens. Some of the projects never launched the token. I think that was it, right? Anyway, I have to watch the interview again.
Yeah, well, Open Game Protocol definitely gonna be keeping an eye on that. And just a final note on this: it's on Solana. it's the focus is meme coins, and I'm thinking, oh, maybe this is could be a revitalization of the meme coin meta, right?
I agree.
As you said, David, it kind of solves one of the problems with meme coins potentially, which is there's nothing to do, and now you have a game connected to the meme coin that helps spread the mind share, keep people engaged.
Yeah. And so here's the thing, Andre, which I thought was really, really cool. And I didn't really understand it the first time he said it. He said it like 5 or 10 times. And by the 10th time, I really got it, which is why isn't there a play button in your crypto wallet, right? So like you have your wallet and you buy some fart coin. And then, you have buttons next to fart coin, which are like buy, sell, swap. Why isn't there a play button, like an actual play button? And so basically, they're working with some of the leading wallets on Solana. This is his words, and there will be a play button for these for like leading meme coins. And you press play, it opens up a thing, and you can choose one or two or whatever several games that are associated with that coin, and those launch. And then you're playing a game. You're playing a full game.
If that catches on, potentially extremely bullish for crypto wallets as a new interface for the internet, potentially disintermediating the app stores, which like that would be amazing if that could happen to any degree. So I'm excited about this.
Yeah, the wallet makers love it because it keeps users engaged and have their wallet open. How do the games get decided in terms of ranking, right? Like, so you press play on Fartcoin. Maybe there's 10 Fartcoin games. How do you know which 2 or 3 are just shown on that interface? Well, Open Game Protocol, the website, it allows anyone who is like staking the derivative coin or trading against it to help rank the games from the most popular games down to the least popular games. So you have this like trading dynamic as well in terms of maybe the best games with the highest volume, they get pushed up to the top, right? And so those games are the ones that get the most attention. Game developers then are, trying to vie for this. And you have all these different dynamics that seem to kind of work well together. And so then you get, presumably you get like really like high quality, good games that get pushed up, and all the crap would just kind of be down below.
Yeah, no, I it's a different take, and I do like the idea of it in wallets where it's kind of like good for retention, and it's kind of, I guess, like I'm thinking about it as a user, where it's like, okay, maybe I already hold like Bitcoin or like Fartcoin or whatever, and it's like, okay, I can earn a little bit more for playing this fun game. Like my goal is to play this fun game, but I can earn a little bit of like Fartcoin while I'm doing it. That's like kind of cool, right? Like so
really cool.
I'll play that one.
Really
exactly,
cool.
And it's also going to maybe increase your loyalty to Fartcoin and increase your the likelihood that you're going to tell people about Fartcoin. Like, you can play this fun game like the coin every time you push the guy's belly, a coin farts out or something.
No, I mean, hopefully Graham, it's not that. Hopefully Graham is not.
Game.
Yeah, hopefully it's a bit more engaging than that, but that could be fun.
My guess is so. He was talking. He was like, how many like really, really good games are there from like Pakistani developers or developers in Indonesia that just they don't have the distribution, they don't have the ability to get the attention as others with huge budgets can have. But he was like, if you can download them right now in the App Store, and they're really good games just on their own. They stand alone. They're really, really good games. It's just that there's no way to get the attention. And this gives them a way at a much cheaper cost to get attention. And if the game is good, again, so this is net win for everybody. If the game is good, then it should go up the charts, right? Of like the different things, and then people are playing it.
Yeah, the one question I guess is like, is there a big like how much? So is the developer going to be buying like I don't know, like $1,000 worth of fart coin in order to integrate into the reward system, or more
No.
of like the coin will donate it? Yeah, that's one curious point I guess I have.
So I think as far the mechanics, he walked us through it is, um, they have to buy some amount of the derivative coin and then stake it. I think that's what they have to do, and I think that's it. And that initial thing is how they get into the rankings of the thing, and then what happens is traders can jump in then and speculate on, for example, which games they think are going to do well within that community, right? And then that can help games rise up or go down in the ranks. So you get like this kind of like a built-in. I think it's like a built-in mechanism to find which games are the best because the traders, speculators are incentivized to see like, oh, this is the game that's going to do well in the long term, and then they can actually make money on the game doing well.
Which would
I wonder
also
if there. I
increase
wonder
the
if there's
market
a.
depth,
Yeah, and then the meme
making
coins.
the game, making
Yeah.
the players of the game easier for them to
Exactly.
like cash out or whatever. Yeah.
Or no, and it makes discovery for the people who want to just play games trivially easy, right? Because other people are doing the legwork for which games are going to be the best, right?
I wonder if there's like a slightly simpler way to run this kind of thing, because I think like one thing that was really successful in the that isn't like nobody talks about it too much because it doesn't have a coin is the Merkle.xyz and like the reward distribution they do for all the airdrop
Uh-oh.
campaigns.
Andre, we
Oh,
No,
never
I
mind.
have them still.
It's me.
I have them.
I'm good. Okay. They do TVL farming campaigns. All of these. You guys know Merkle, right? Cool. Sorry,
Graham,
Graham, I'm getting echo. Yeah.
yeah, same here. I think his headphones got hosed. Yeah, yeah. Anyway, I know what you're talking.
So could you run this like could you have a new category of this like Merkle kind of form where I don't know what to call it. It's like engagement or like gaming retention type thing where the communities are trying to boost their distribution, right? So they basically reward not TVL or something, but reward gaming engagement or like whatever as a way to and then there's it's like a little bit more of direct of a marketplace. That's just an idea where it's like okay, now the coin creators connect directly with the gaming creators, and they're basically trying to run campaigns uh, through this thing to boost engagement of both. Uh, that's like the one thought I have where it's like once it starts getting into staking derivatives and things like that, that's where I think you brought it up. Where it's like, does this just get too complicated? So I do
Yeah,
wonder if there's like, yeah, but it sounds interesting. Looking forward to seeing how
yeah.
they figure all this stuff out.
If you want, you should because you should listen to the interview we had because I think I'm butchering some of the details.
Yeah.
It was a lot to take in, but I am definitely gonna to watch it again because it was so funny. The first 30 minutes of the interview, it was just me and Graham doing this like with like hold on now. So and it was just like
He might need to work on a dumbed down version of his pitch for retards like ourselves.
Well, no, but the problem is like if you I've read several books on Facebook's ad network, right? This famous kind of new thing that they basically created. And even after reading several books, if you ask me to explain exactly how this ad network works, it's a little it's not intuitive exactly. Like I know it's a marketplace with like more than two parties, but it's just like oh, so I don't know.
All right. Let's wrap it up, guys. But before we do that, I just want to share this video. I don't know if you guys have seen it. Just going back briefly to the retail and where we are in the cycle.
Uh-oh.
Just a moment, please.
Oh God.
Help. Okay. Investing. Don't know what to do, what it is, but I need help. I need help. Okay, so I would recommend. So me personally, I have 1.3 million in XRP. So right now it's about $2 and something cents, but the community knows that when I know it will bump up to $10, I'm going to be basically set for life. So I would highly recommend buying XRP. Why are you crying? What the hell did you just say? XRP. I couldn't even understand what X could even stand for. It doesn't stand for anything. It's just like, XRP doesn't stand for anything like explicitly. It's just like I'm screwed. Crypto men come this way. Help me. Just put money into XRP and then you're set for life. Put my money in it. Or just spend it all, whatever you want to do. Well, will the IRS come after me if I, they won't come after me if I do that? You haven't paid taxes in 2 years, so they're going to come after you anyway. Not if I had my money in this XPR stuff. Right? Yeah, you're right.
Good Lord. So she's saying when XRP 3X's basically, yeah? Or was it?
She's set for life.
She's set for life. She has 1.3 million of her dollars in XRP. You know what the sad thing is?
The community knows that. The community knows. So
she might end up being the richest person
XRP,
in this conversation.
Yeah. Oh, definitely. And XRP could 3X from here.
For sure.
Would you be surprised if XRP 300%ed this
no, I wouldn't be surprised
cycle?
At all. But I'm a man of principles, David.
Arthur Hayes said hype. Arthur Hayes said the upper limit target for hype is 125x in 3 years. So yeah,
does that make it the third biggest coin? What's that make it?
I have no idea. 125x. Jesus. It's like that's insane.
That would be more than the entire market cap of crypto because hyper liquid is currently like 45 billion FTV. So if 100x, the current crypto entire market cap is 4 trillion.
Stop trying to do the math. 1000x.
1000x, yeah, 1000x. There you go. But that's
all right. So yeah,
we are in that point of the cycle. So
sign of the times. XRP.
Yeah, retail. Maybe retail is sniffing it out. But then, to Andre's point, where we started this conversation, if retail is joining in now, how much longer in the cycle do we have?
3 to 6 months.
3 to 6 months. Yeah, I think once retail joins in, you're going to have at least a mini bust when they get mopped up.
Yeah,
when they accidentally bought XPR instead of XRP.
Just okay, just never sell all your crypto though. Okay, take some lifestyle chips off over the next whatever, because you never know what's going to happen. Right?
We could be in the super cycle.
It could be a super cycle, and the worst situation you want to be in is where you got that FOMO and you buy back in at the top. Right, so
my hype.
Never sell it all. Just take off the lifestyle chips. That's the way.
My hype could 125x.
You don't want to miss that 125x pump, David.
All right, let's wrap it up. Andre, David, thank you as usual for your insights. Thanks everyone for listening. That's it for Bitcoin.com's Token Narratives for this week. We'll see you next week.